Okay, we are on. All right. Well, hello, everybody. Good afternoon. Good morning out in the West. I want to thank you all for joining us today for this webinar on upcoming changes and best practices related to reconsideration of value requests, everybody's favorite topic. My name is Steve Sussman. I serve as our Chief Business Development Officer here at NAN, looking after relationships with lenders and brokers across the industry. And while I'm not an appraiser myself, I'll be helping to moderate today's discussion presented by NAN's very own chief appraiser, Bill Waltenbaugh. And Bill, as a certified residential appraiser with more than 30 years of property valuation experience, I think we can say he's seen it all. These days, Bill is very passionately focused on helping evolve and modernize the valuation industry in a way that benefits appraisers, lenders, borrowers, and really working to leverage technology to support continuous improvement in accuracy, efficiency, and impartiality. And the ROV discussion here very much touches on all of those things. So I'm going to hand it over to Bill in just a moment to kick us off. I did want to mention, though, that we very much welcome questions, comments, general interactions throughout the presentation. As an AMC, we work hard to understand the balance between valuation concerns from our lender partners and the borrowers and independence requirements from the appraisers. So hearing your candid perspective on topics like this is really valuable to us. I want you to feel free to chime in with any feedback, questions, comments along the way. In order to keep things running smoothly, though, I'm going to ask that you submit your questions or comments in the chat box. So rather than raising your hand or calling out questions, if you could just put those into the chat. I'm going to watch the chat throughout the event, and I'll do my best to jump in, interject for questions to Bill along the way, or if necessary, to hold them to the end for some of them and address them then. But we will do our very best to hit on every question that comes our way. So with that, welcome again. Thank you guys for being here, and let me turn it over to Bill.
Thank you, Steve, and thank you, everybody, for taking some time out of your day to connect with us here and talk about the new reconsideration of value process. As Steve mentioned earlier, I've been in the business over 30 years. Matter of fact, I started in the business in August of 1990. So it's really just about the only thing I've ever done. I worked as a zoning administrator for a small town or city for a short period before picking up the mantle and running with in the appraisal side of things. And nothing. We're talking about the reconsideration of value process, and for the whole 34 years that I've been doing this, that's really nothing new, right? I mean, ever since the very beginning, if there was someone who wanted to challenge the value that I put on an appraisal or had some issues or concerns, it certainly wasn't anything that kept them from letting me know it, right? And so what's different? What's going on? Well, I mean, it's really kind of a standardization that's occurring across the industry. And so today we're going to look at these 5 areas, and hopefully we can do a big comprehensive view of this new process. We're going to begin by looking at the property appraisal and valuation equity, or AKA the PAVE action plan, and how it set the foundation for addressing disparities and ensuring fairness in property appraisals. Next, we'll move on to taking a look at the policies of Fannie Mae, Freddie Mac, HUD, FHA, and how these policies are paving the way for a more standardized ROV process across the entire valuation industry. After that, we're going to break down the essential elements of a compliant ROV process, clarifying the roles. We're going to look at the role of the borrower, the lender, the AMC, and the appraiser. Everybody has a role in this process, and we're going to look at each one of those roles. And then finally, we'll discuss NAN's specific ROV policy and, how we think that it's designed to keep everybody compliant and to the expectation of the agencies. And then, of course, we'll wrap up with some questions. But as Steve mentioned, you don't have to wait to the end. If you have any questions, if as we're moving through, you have a question, go ahead and put it in the chat. Steve will be monitoring that, and he'll be able to pass those on to me, and we can discuss them as they come up. So before we discuss the specifics of the new policies, it's important to understand the foundation that kind of led to them. This property appraisal and valuation equity action plan is central to this shift towards a more equitable home valuation process. And if we understand the principles behind PAVE, it'll help us appreciate why these new ROV policies are so important for the stakeholders. So, PAVE was officially launched by the U.S. government and announced by President Biden on June 1st, 2021, with the objective to help close the racial gap by assuring that everybody receives a fair and accurate home valuation regardless of race or ethnicity. The PAVE task force, which is co-chaired by HUD, the White House, and 13 federal agencies, make up this task force. Ultimately, the mission is simple but powerful, and that's to provide equitable opportunity for generational wealth building through homeownership. So what does PAVE have to do with the ROV process? Well, the ROV process is a key component in the PAVE initiative. At its core, the ROV process empowers homeowners and buyers to challenge an appraisal they believe are inaccurate or influenced by bias. It creates a formal, standardized pathway for requesting a reassessment of a property's value, ensuring fairness throughout the process. And ultimately is just another step towards achieving PAVE's goal of making sure that everybody has a voice in this process. So now that we've kind of covered PAVE's role and how we're kind of transitioning from the fact that we've always had ROVs, that process in place, it's certainly not new to many of us on this call. PAVE's role is kind of promoting a standardized process for this to take place. So we're going to shift our focus to the specific policies introduced by Fannie Mae, Freddie Mac, and HUD FHA. And these guidelines are crucial for creating the consistency in the ROV process across the home valuation industry. So by understanding how these policies align, we can better appreciate their impact on our industry and the steps we need to take to stay compliant. So when it comes to the policies, and it's no surprise, Fannie Mae and Freddie Mac's policies are very well aligned, almost identical. They do look a little bit different on paper when you read through them, but ultimately they cover the same items. And it's not too surprising that HUD/FHA is also very closely aligned. There's some minor procedural differences that exist, but mostly just because of the differences in the program. Overall, there's a unified approach in regards to how ROVs need to be conducted in the industry. So meeting the expectations of these three agencies requires addressing the core elements to ensure consistency and full compliance throughout your process. So a solid reconsideration of value policy is crucial, especially with the mandatory implementation date of October 31st. It was supposed to be a little earlier, But because there's so much to kind of pull together and get ready, the agencies decided to push back that implementation date. And so now we have until October 31st to get all the policies in line and a process in place so that we can all be compliant. So the first thing you need is make sure that you have a clear policy for managing the ROV process and ensure they comply with the relevant agency guidelines. And that the whole thing really kind of starts off with borrower disclosure. It's a main component, in this policy, and it's also one that kind of takes us back to that PAVE initiative, right? Borrowers need to know that they have an opportunity to dispute the value if they think that there are errors in the appraisal report, if there's better data that needs to be considered, and they need to provide, some type of substantial evidence and why they think, that this information is important. So borrowers need to know exactly how to initiate an ROV request with clear instructions. And remember that only one borrower-initiated ROV is allowed per appraisal. So getting it right up front is essential. It really is something that you need to take the time, make sure you're getting it right, because there is a one and done policy in that regard. So let's just take a second here and look at a couple of disclosures. These are just samples. When the whole ROV thing started, I had several of our clients reach out to me and ask me, hey, do you have any type of disclosures? Well, I mean, that's not really our responsibility. It's the responsibility of the lender. But in the interest of being able to assist in providing some type of language, I pulled just a few sample disclosures together. The one we're looking at here would be one that you would provide to the borrower at loan application. We have to do it twice, one at loan application and when the appraisal is delivered. So there's a few elements that we need to make sure is part of that disclosure. Number one is you have to make sure that they understand they have a right to request a reconsideration of value if they think that there's something wrong. And that if they are going to challenge a value, it needs to be supported. So it can't just say, that's crazy, I think that value's low, everybody else is selling for higher. They need to take another look at it. There needs to be some substantial elements that are provided that supports the fact why you think that it needs to be reconsidered. And then I understand that there's a review process involved. There should be some back and forth that occurs, and we're going to get into that a little bit more here later, but there should be some back and forth and communication that occurs between the borrower and the lender, and making sure that everything is, all the elements that are necessary are there, that it's air compliant, and that it's something that the lender is actually comfortable sending to the appraiser. And then again, they do need to make sure that it's a one and done. This is a disclosure that would possibly be sent to the appraiser once the appraisal's complete. So again, two disclosures, one at loan application and one when the appraisal is completed. The elements really aren't that different, right? They're pretty much the same. It's just making sure that they understand and know that they've got this opportunity. So this does not look a whole lot different than what the last disclosure looks like. So I'm going to kind of take a pause right here. I don't know, Steve, whether we have any questions. I do know that there was a lot of questions that I received over the last month, 2 months in regards to disclosures. One of the big ones was, can NAN deliver the second disclosure to our borrower if we have it set up with you to deliver the appraisal to them? In other words, sometimes we'll actually deliver the appraisal package to the borrower on the lender's behalf, and they've asked us whether or not we can also include that disclosure. Some have even gone as far as wanting to provide an ROV form. I think that we could probably work with you on that. I'm quite confident that we can get the disclosure delivered. The ROV form, that may be a link that we can give to them that takes them to a specific site where they can get that information. But if you're interested in Nan doing that for you on your behalf, you should be reaching out to your representative and chatting with them about it, because we need to get your disclosure that's been approved by your compliance department, your legal department, whoever it is that you have to approve those kinds of things, so that we can get that disclosure delivered to the borrower with the appraisal. Steve, do we have any questions at this point?
Thanks, Bill. No questions yet. So far, everything looking great. I will pop in, though, as any questions may come our way.
Okay, fantastic. All right, so switching back here to the ROV policy checklist, it's very important that before you initiate an ROV, a review of the appraisal should be done. A review should be done by an underwriter, a qualified SME. Someone needs to be taking a look at that report that was delivered, and the elements that are in it, and in comparison to LCA or CU or whatever other review process that you have. But there should be a review completed on that report before you would consider moving forward with an ROV. Once that review is complete, and if you do get a borrower-initiated reconsideration of value, the next critical step is evaluating the validity and completeness of the ROV request. That request must address specific concerns and include specific detail. You must ensure the request meets the appraiser independence requirements. AIR still applies, right? So you can't get a request saying, I think the appraiser's value is low by $50,000, or the appraisal came in at $100,000. I think it should be worth $150,000. There shouldn't be any mention of a specific direction or a specific number. The request still needs to meet the AIR expectations, or appraisal independent requirements expectations. And if the ROV is unclear or not compliant, you got to work with the borrower to correct it before moving forward. That back and forth with the borrower and the lender, that doesn't count towards the one and done deal, right? The one and done deal is once it's submitted to the appraiser, right? Or submitted to Nan, who then submits it to the appraiser. And we're going to talk about the AMC role here in a minute, but we're also going to be doing a review of these as well. So if we think that there's any issues or concerns, we'll definitely be in communication with you before submitting it to the appraiser. Once it's submitted to the appraiser, then we're on our one and done deal.
Hey, Bill, I've got a question. Actually, a question just came in too, very similar to the question I was going to ask you. Beth is asking, if the ROV doesn't support the complaint of the consumer, can the lender decide not to send the ROV? And I guess I would just tack on to that. We're updating this process to try and empower the consumer more and avoid potential bias concerns. But we're also now bringing in people who are not trained in this and who may have never even had an appraisal before. So it's going to be a steep learning curve, probably many times, where they are submitting something that might not really pass muster. But at the same time, I don't think we want to have the burden of declining that ROV be placed on the lender completely either. So what's the best practice there if you have an insistent borrower, but it's not really meeting the standards? Can the lender bring us in as the AMC into the loop at that point to deliver the bad news, for lack of a better way to say it, that we can't send it to the appraiser if it's not done compliantly?
Yeah, I mean, look, these are all great questions, Steve. And I mean, what are we going to find out? I think we'll kind of find out what happens as things move on. Um, ultimately, it's the lender's decision to make their collateral risk decision on the use of that appraisal in doing the loan. And if someone's submitting comparables that don't look like they're better than the ones already being used by the appraiser, they're further away, or they sold a lot longer ago, or they're twice as large in square footage. You need to have that conversation, with them, and someone who can explain, look, the comps that you're submitting, and you're going to see the ROV form that I've put together that will assist with this. But the appraiser is using things that are closer, they're more recent, they're closer in square footage. The stuff that you are submitting, they're further away, they're maybe sold older, or they're twice as large as the subject. These really are, if we're going to challenge the appraisal, we really need to find better sales. Ultimately, the flip side is that you let them submit the comps that you maybe don't think would be the best. The appraiser looks at it, and let's say maybe they include those comparables and they increase the value, and now you got a report that you don't think really is that great for basing your loan on. So there does need to be some communication that occurs there, right? Between the lender and with the borrower. It needs to be a collaborative effort on what can and can't be submitted. And so ultimately, again, at the end of the day, you've got to make your collateral risk decision based on that appraisal.
So,
And
Bill, just to be clear then, if the lender sees an ROV come in that clearly is not appropriate, there is not any liability concern for them to say to the borrower, hey, we can't put this through, and here's why. Like, it's not incumbent upon the lender to submit every single ROV, if it's, especially if it's not done appropriately, correct?
Yeah, I mean, look, I think that's probably a conversation and building out your policy that you need to have with your compliance department, right? And decide how it is that you want to move forward. I mean, ultimately, the appraiser, if the sales are not good, they should be coming back and supporting the fact that the sales that were submitted, are not as good as what was provided. But I've been in the AMC business for the last 14 years, and I will tell you that anytime you send anything to an appraiser to reconsider anything, and you open that appraisal back up, you don't know what you're going to get back, right? Um, so yeah, I mean, I think that there needs to be, again, we're going to talk about making sure that you have a qualified underwriter, SME, involved in this process, someone who's educated and understands how to have these conversations. I think that's a big, that's an important part of this, but we're kind of getting ahead of ourselves as it is right now.
Okay.
So when we get the request, you send it to Nan. As long as it's compliant, and as long as it meets all of the elements, right? Then that request is going to go to the appraiser. And when we dig into it a little more, what those essential elements are, I think that you'll see, there is quite a bit of a, I don't want to say burden, but there's a certain amount of detail that needs to be included, in these requests. Again, it can't just say, here's 3 sales, reconsider it. There needs to be more substance to it.
Thanks, Bill. And I know you need to keep moving through the slides here, but real quick, Sean brought up a good question. Um, how do you see this policy applying or not applying for non-GSE loans, right? It's not going to Fannie Freddie. Is the still necessary to provide the ROV disclosure and to follow these procedures to for non-GSE loans, or is that something where this really wouldn't apply?
Yeah, no, that's a great question. And I've actually talked to some of our private non-QM lenders, who they don't sell to Fannie or Freddie, or their loans are not insured by FHA. And I even told them that we were having this webinar. I said, I'm not sure that maybe it wouldn't be even something you're all that interested in, because you're not really bound by those policies. And I was quite I'm not shocked, but surprised with their response. And they said, you know what? We really think that since this is becoming the standard in the industry, in the expectation, and as a safe harbor, from certain bias or discrimination type cases, we think that it's important that we also adopt a policy. So again, that's really kind of something that your compliance or legal department or those that are in charge of putting those policies together, needs to let us know or make those decisions on how you want to move forward.
Great, thank you, Bill. That's all the questions for now.
Okay. All right. So the so yeah, a standardized format is needed for submitting the ROV, and this includes the borrower's name. Right? These are required elements that need to be on the ROV: the borrower's name, the property address, the appraisal effective date, the appraiser's name, and the date of the ROV. And again, when we get towards the end, I'm going to show you a document that I put together that you can actually share with a borrower or interested stakeholder. Because look, most of us here on this call are used to looking at appraisals all the time. We can find that information very quickly on an appraisal. Those who aren't that are not looking at appraisals every single day, something like an effective date. There's several different dates on an appraisal. The effective date's a very specific date. And so, I put a document together to help them find where that information is. The ROV must identify the specific areas of concern in the original appraisal. So again, it's got to say, hey, I think that this is wrong, or I take issue with this specific item, right? They've got to identify what it is that they think is incorrect in the appraisal. It could be reporting the square footage incorrectly. It could be saying that the market conditions weren't reported correctly. It could be all kinds of things, but it needs to be very specific on what it thinks is wrong with the appraisal. And then it needs to include supporting data. Now that includes up to 5 comparable sales. And if you do provide, comparable sales, you need to provide the data source. Matter of fact, you need to provide the data source for any data. So for example, if you think the square footage was reported wrong, maybe you upload the county record documents that includes a sketch and shows how it's different than the way it was reported on the appraisal. So there needs to be some type of data support for why you think something's wrong on it. And then at the end, you need to explain why you think the error with the correct information, how that impacts the overall valuation. And again, I provided a document that you can use that even includes examples on how to pull all that together. And then lastly, you also need to establish a reasonable expectation for the appraiser to get the revised report back to you. NAN, a lot of when this came out, and disclosures were being put together, people were asking me, how long do you give an appraiser to respond to an ROV? Because they wanted to come up with that reliable expectation. And my response is 48 hours. So in other words, once we submit that to an appraiser, we're looking for them to get us a revised report back or response to that reconsideration within 48 hours. So, what are some of the other components here in your ROV policy checklist? Effective borrower communication is critical in the process. You should be acknowledging the receipt of the borrower's ROV request in writing. You should be setting reliable expectations regarding the timeline for communicating the results. And, constant communication, updates, ensures transparency and builds trust with the borrower. And then again, once the ROV is received, a thorough review of the revised report is required. You got to confirm that all of the concerns and deficiencies that were raised in the ROV request have been addressed. And whether or not the appraiser makes any changes to the value or not, they still need to address all of the points in the ROV within the appraisal, right? So a revised report is required, and it must address all of those points.
Bill, I got a question here. When submitting the ROV, Brandon's asking, can a previous appraisal be submitted as part of the reconsideration?
No, well, I mean, you can utilize having a previous appraisal can be very helpful, right? In writing up your ROV as something to reference and to put your ROV together. Remember, there's a very specific format on how the ROV needs to be presented to the appraiser, and just sending them a different appraisal doesn't meet those requirements, right? Again, it has to have all of those, elements: the borrower, the effective date, the date of the date of the ROV, the appraiser's name. It needs to have all of those elements in it. But then again, it also needs to break down where it thinks that there is an error on the report. It then also needs to provide additional data, and then why you think it makes a difference. Simply referencing another appraisal, that appraisal, that if you have one, should be giving you the data sources for their conclusions, right? So you can definitely pull information on that in putting your ROV together, but it's just simply sending another appraisal isn't going to meet the requirements.
Thanks, Bill. No, that's great information to leverage the data, but not send the actual report. And I know you mentioned here determining if the revised report's credible and adequately supported. This is something that comes up as a question often between us and the lender community, which is if it does not appear to be answering the question in an adequate way, or if it does not appear to be credible, who is it fall upon to make that determination? Is that the role of the AMC? Is that the role of the lender? Is there a mix there working in tandem? How should that determination be made?
Yeah, well, I mean, the policies, right, or the policies from the agencies specifically say to the lender, if you get a report back and you still think there are material deficiencies, errors, problems, the appraiser didn't address it correctly, or any of those things, there's a mandatory reporting requirement, and that means that you need to submit that information to the appropriate state agency, or whatever it is that for that problem that you would identify.
Thank you, Bill. I appreciate that. That is all for questions for right now.
Okay. And then just kind of as a wrap up here in your policy, right, there's a few other core elements that we want to talk about. Reporting, proper documentation and record keeping is essential throughout the ROV process. It's also essential that you remember that error compliance appraiser independence requirements, they don't go away. They're still very much a part of the expectations. So you need to, any policy you put together, you got to keep that in mind. Here's the mandatory reporting that I was talking about previously. Any unresolved material deficiencies or evidence of discriminatory practices must be reported to the appropriate state appraisal licensing agency or regulatory board. And then that last point down there is staff education. You really need to have a qualified underwriter, SME, someone who understands appraisal, who understands appraisal principles and process, but is also well trained in fair housing and bias and discriminatory practices as well. So staff training is a big part of it. I've had some people reach out to me and ask me, well, how do I get my staff trained? I don't know that there's one specific place right now where a person can go to get that type of training. I'm sure, being that this is a requirement and that it is a need and people that are asking for it will certainly be finding some educational opportunities tailored specifically to this. I have a New York State license. For me to renew my license, I've got to take a 7-hour fair housing course. And then every 2 years, I have to do that once. Then every 2 years, I've got to take a 4-hour update on fair housing. I just did that just a few weeks ago when I renewed my New York license. Now, here in, I think it's a year or 2 years, the appraisal foundation is actually going to make appraisers have that same policy, the 7 hours and the 4-hour update moving forward. So I found the course that I took, that 4-hour update. Wouldn't suggest taking the 7-hour, but the 4-hour update that I took, it was actually pretty decent. It provides some really good information. The Appraisal Foundation, you go to their website, they have certain courses on USPAP and appraisal, and then obviously, they already mentioned McKissick, the Appraisal Institute. These are all kinds of places that you can go to find educational courses that should be helpful in that regard. So let's take some time to focus on the specific roles and expectations of everyone involved in the ROV process. Whether it's the borrower, the lender, the AMC, or the appraiser, each party has a role to play in this process. So it all starts with the borrower, right? They've received their disclosures, and it's really up to them to decide whether they want to formally submit an ROV request if they believe the appraisal is inaccurate. And again, they need to provide that supporting information, a detailed explanation of any areas they believe are unsupported or inaccurate. It includes up to 5 comparables, no more than that. That's part of the policy. And it's got to have a data source, preferably MLS. That's the one that most appraisers are going to recognize as legitimate. So that data source needs to be included. And the borrower needs to respond to any inquiries or requests from the lender for additional information, right? So once they pull this together and they submitted it to you, you've got to do that review. If you have questions, if it doesn't comply, if you have concerns about what they've submitted, there's got to be a communication and a back and forth, and they need to keep those lines of communication open. The borrower does with you, so that you can pull together an ROV that is worthy of being submitted. And timing is crucial, right? Because in the policy as well, it says once the loan's closed, you can't do an ROV, right? It's done, it's over. And so timing is crucial. If they want to do that, it should get moving, quite soon, because ultimately there are closing dates and everything else that need to be met. So the sooner you get the ball rolling, the better.
Bill, I've got a couple questions coming in if I can jump in here.
Yep.
I'm going to read from Beth. She says, my interpretation of interagency guidance is that the borrower can submit an ROV on valuations, not limited just to full 1004 appraisals. And she's saying how they do a lot of portfolio loans where there's a property condition report that includes an opinion, and that she believes that we should create an ROV process for those valuations as well to fit best practice to ensure that there's no bias in the opinion part. So think of evals, value net drive-bys. And Beth would like to know if you agree with this interpretation, understanding that AVMs have their own rules.
Yeah. So the problem with doing an ROV with an AVM is it's a computer, right? And so it's going to do its regression model. It's going to spit out its answer, and you can't really challenge it. I mean, it's just it's an algorithm, right? It goes through that regression, and it goes through that process, and it gives you a number. So it's really kind of difficult to do an ROV for an AVM. Matter of fact, I would go as far as saying it's impossible. And if you talk about a BPO or an eval, well, then yeah. I mean, I think that you can, because there's a person involved in that process that's doing an analysis on data, and they can then also receive additional information, review it, and make modifications to it. You know, um, that's and again, that would kind of be between you and the provider and how you set up that process. For challenging any values that you receive from them. So, does that answer that question? I hope.
That I believe it does. Bill, I'll let you know if anything further comes in. And I do want to just mention, I know Kim here had asked about getting a link to some of these great sources of information. I am going to place in the chat right now a link to our updated ROV website that has
Yeah.
quite a bit of information on it, covering a lot of what we are discussing today, a one-page guide, and some step-by-step instructions for submitting an ROV to use with your borrowers. So
Yep.
by all means, leverage that information and let us know if you have further questions.
Yep. So here we go to the lender's responsibility. Much of this information has already been covered in this process. We can quickly review it again. And again, as a lender, you have a few key responsibilities when managing the ROV process. First is the disclosure, right, of to the borrower. And it should happen twice, one at loan application and one upon the delivery of the appraisal. Again, Nan may be able to assist you with that piece. You need to thoroughly review the appraisal before you consider any reconsideration of value process. And if they do submit an ROV, you need to review that carefully and communicate with the borrower if necessary to correct any gaps or shortcomings or things that need to be done before it's submitted. And then, once the ROV is submitted, you got to keep the communication going. And once you receive the appraisal, you will share those results with the borrower. And again, ultimately, I don't think this changes, right? If a borrower submits a reconsideration of value and you have that revised report, if you're selling to Fannie Mae or Freddie Mac, or it's being if it's being insured by HUD or FHA, you're still responsible, right? It's not like, hey, well, we kind of really think this is overvalued, but they did an ROV, and so this is where it came in, and we're good. I don't think that's their policy at all. You're still going to be responsible for making sure that the appraisal is well supported. AMC responsibilities, really the AMC. There's not a whole lot different for us. I mean, we've been managing these things for a really long time, right? And really, what we do is we act as an intermediary easier for me to say, between lenders and appraisers. Primarily we are going to be taking a look at the requests that come across, make sure they are compliant. We also make sure that who's submitting the request is allowed to submit the request. A lot of our lenders have some guidelines on who they allow to submit ROVs and who they don't. I think that's a really important piece, right? Because you probably have specific people set up to actually do the review of the appraisal, do the review of the ROV, work with the borrower. So really probably we're going to make sure that when we get that, it's coming from the person you've identified as being able to submit it. So we're going to be doing that check. And then quality control is a big part as well. So once we received a revised report, we're going to want to make sure that the appraiser addresses every item that's in that reconsideration, because that's part of the policy, right? There's no point in us sending it to you, there being a gap, you sending it back to us and then back to the appraiser again, right? So we're going to make sure that all of those items are addressed before we release it to you. So ultimately, making sure that it complies with AIR, make sure it meets all of the expectations in the policy, make sure everything is addressed, by the appraiser. That's what we're going to do for you. And then obviously, if you want us to deliver disclosures, we can do that for you as well. Appraiser's responsibilities. They must thoroughly review the ROV request submitted by the lender of AMC. A lot of ROVs up until now, it would say, hey, we'd like to dispute the value. Here are 3 sales, right? And then just submit those to the appraiser, or 5 sales, or whatever it is, right? And so there wasn't a whole lot of substance to it, right? The appraiser just looked at them and say, no, I think the ones I used are better, and I'm not going to use those. And case closed. It's all done. If the ROV is done correctly, you should be pointing out the specific areas. It's going to be a whole lot harder for the appraiser to discredit what is submitted whenever it's submitted with support, right? And that support being the argument and the data and the reasoning, right? So, appraisers are going to have to take these very seriously. They're going to have to provide a response. And they should be providing that response within the reasonable time frame that they were given. Even if they don't change anything, a response is required that clearly addresses every single point. So here at NAN, ROV policy form has been carefully designed to align with the industry standards, ensuring a consistent, fair, and compliant approach for all stakeholders. So in this next section, we're examining NAN's ROV policy, our ROV form, and how we think that it will streamline this entire process. All right, so really NAN's policy, when we put this together, the purpose and objective, was to provide borrowers with a fair and accessible process for requesting a value reconsideration. Our policy offers clear guidance on how the ROV request should be submitted and processed, ensuring that everyone is aligned with industry regulations and expectations. The policy is designed to facilitate effective communication and resolution between lenders, appraisers, borrowers, and helping everybody keep the process transparent and efficient. And above all, our goal is to maintain the credibility and reliability of the overall appraisal valuation process. NAN has a one and done policy. That's nothing new. We've had that policy ever since I started here 6 months ago. It's not new to NAN either, right? I've worked at several different appraisal management companies. Most all of them have a one and done policy when it comes to reconsiderations. Obviously, there's three different times an AMC will go back to an appraiser for revised reports. One's in the AMC QC process, right? One is during the collateral risk review, which could also include considering additional sales. So if the underwriter is looking at it and they look in collateral underwriter or LCA, and they're like, hey, what about this sale? Why didn't the appraiser use this? That's part of the collateral risk review of that report. Those are underwriting requests. That's not a reconsideration of value. The reconsideration of value is the third thing, and that third thing then comes from someone once the appraisal's been completed, approved by underwriting, and somebody wants to challenge the results of that report, right? And so that's the reconsideration, and that's the one and done policy that we have. Um, and we have this policy because it's in alignment with agency guidelines and appraiser independence requirements, right? To ensure the process remains fair and unbiased. We think it's really important that the borrower participation be included in any reconsideration. In other words, you shouldn't be submitting a reconsideration of value unless the borrower is part of that process. Because of the policies that we're under, they have that right. So if NAN has a one and done policy for ROV, if you're going to do an ROV, the borrower should be involved in that because we've disclosed to them twice that they have that right. Okay. So borrowers need to be involved in all reconsideration of values. This policy upholds AIR principles by maintaining the appraiser independence and objectivity, and multiple requests can compromise the integrity of the appraisal process. So while our policy is somewhat strict, we do allow some exceptions. If it's found out that there's some materially deficient errors, if there's some inaccurate facts, uh, things of that nature, then we'll take another look at that. And if it significantly makes an impact on the value, we'll certainly take another go back to the appraiser to have them fix those errors. Now, it's not like, hey, here's 5 comms, and the appraiser disputes all 5 comms and say, oh, well, you know what? We found 3 better ones. How about these 3? We're not going to do that, right? So again, it's a process where it's one and done. You need to be very careful when choosing your comparables the first time.
Hey, Bill, just a quick question to jump in with there. Thank you. We're talking about the responsibilities of the various parties. Let's say the ROV comes back and it's not what the lender or the borrower was hoping, and the appraiser sticks to their position. Typically, historically, NAN's role would be to facilitate communication back to the lender to make sure there's a clear understanding of why the appraiser made the statements that they did. But what if it's the borrower? Does it have to fall to the lender to have that direct conversation with the borrower, or can NAN or any AMC step in and assist with that probably difficult conversation to explain why there was no change in value?
Yeah, I mean, that's not a very common policy or process that I'm aware of. I mean, have conversations like that occurred? I'm sure they have. Have I done that in the past? I'm quite confident I have done that as well. But again, it's ultimately the lender's decision, and usually those conversations need to be coming from them because NAN's not making collateral risk decision, right? So, if there's some additional information that we can provide or some assistance in helping understand, that's certainly something we might be able to assist with. But ultimately, it's not our decision. So
Thanks, Bill. Yeah, I
yeah.
think just to be clear, it's really just can we assist with the burden of explaining properly to the borrower what's taken place. And I think that that could happen one of two ways. The lender, of course, can work with us closely before picking up the phone to call the borrower directly, or can bring the borrower onto a conversation to hear the results and understand the results if there are questions. Just wanted to make sure that it's clear that a little different with the borrower involvement, but that we are still here as a resource.
Right. Okay, so here we're in the part of the policy. We're talking about the ROV content. We've kind of already gone through this, quite a bit. Obviously, you got the borrower and the property information that we've covered, the appraisal information that we talked about, the effective date and the appraiser's name and all of those things. We also ask for the contact information of the person that's submitting it. It could be the borrower themselves or someone may be assisting them, right? And we're certainly okay with that as long as they're part of the process. But it's important that we get their contact information in case we have any questions or need to provide any feedback. We're able to get in contact with them. And then again, need to have the identification of the issues. You need to have the supporting data, comparable properties, again, with data sources, and the rationale for the reconsideration. So I'm kind of moving quickly here because we're quickly approaching the end of the hour, and I want to make sure we get all of this in. Although if I'm going too fast, somebody can always hop in with a question. Here's the reconsideration of value form that we put together here at NAN. You'll see the data request up here. You'll also see a place to put the information that's required, the standard format, the information that the agency requires. Again, the contact information isn't necessarily something the agency requires, but we think that it's important to gather that information so that we can be in communication with the person, if necessary, who made the request. And again, we have a little checkbox here. We want an attestation that the borrower was involved in the process. Ultimately, they're the one that owns the mortgage for 30 years. They're the ones that's going to be making the payment. And so if there's supposed to be a challenge to the value, it's their loan. They should be involved in it. It's a two-page document. This is the second page. We provide the space here for you to identify and describe the appraisal report's unsupported, inaccurate, or deficient areas. This is where you can point out the errors that are in the appraisal report or what you think are the errors. We have space here for 5 comparable sales, and some information about it. And then this next section right over here with these little boxes, right? Those are clickable. And then you can identify the sales. But you could say here, the following sales are more similar in gross living area to the subject. We're referring to these sales over here. So maybe it's sale 2 and sale 4. So then you would put here 2 and 4, right? Following sales are closer in proximity to the subject. Indicate which sales those are. So again, you've got to build a case in these ROVs, and we're trying to make it easy and helpful for the person submitting this to do that. These are things in the appraisal process that an appraiser considers. Properties that are similar in GLA, properties that are in close proximity, properties that are similar in age, properties that are similar in condition, more recent transfer dates, and properties that are in similar design, feel, and amenities. So you can point out what you find is wrong. You can provide your sales. You can indicate which ones you think are better. And then down here, you could say, the appraiser used older sales that are not as similar in design and square footage. Columns 2 and 3 are also, we believe, to be more similar in condition because it also has an updated kitchen and bathroom like, our property when we did that 2 years ago, right? So it's really kind of designed this along with the document that we provide to help fill this section out should be very beneficial. Anybody have questions on the ROV form?
No questions here, Bill. Everything looking good.
All right. And look, I know a lot of clients made their own ROV form. Totally understandable. I mean, I would think that that's really kind of the way most would decide to go. If you see something on our form and you think it's really great, and, steal it, right? Pleasurize. Take it, put it on your own form. We're totally fine with that. If you want to use our form, obviously we're good with that. We think it's really good because we designed it. So, but again, if you feel like you need to use your own form, and if there's something on there you feel that is helpful, feel free to take that information. Um, ROV submission. Clients can submit their reconsideration of values through the designated platform. Alternately, they can submit it by sending an email directly to nan-disputes@nan-amc.com. And then once it's received, NAN staff appraiser is going to review the ROV. They're going to make sure that, again, it comes from an appropriate party from the lender. Even though these are borrower initiated, they cannot submit them directly to NAN. It must come from the lender themselves, and preferably by someone the lender has identified as being the appropriate party. We're going to make sure that it's air compliant, that there's no more than 5 sales, that it has all the essential elements. And one thing that we're going to check for, believe it or not, how many times we get ROVs where, you get 4 sales submitted and 3 of the 4 were already included in the appraisal. You get a one-shot deal. Don't send us comps that are already in the report, right? We'll also probably check, make sure they're closed sales and, things of that nature. But ultimately, we're going to kind of make a quick check through there just to make sure everything's good before we submit it. We want to be helpful in that regard. Once it meets all the criteria, we're going to submit it to the appraiser. Once the appraiser completes it, again, we'll start the review process. We're going to make sure everything is addressed. One of the things that we look at, an appraiser will say, I didn't use comparable number 2, right, because it's a mile away. And then we'll look at the report and we'll say you already used sales a mile and a half away. Well, that doesn't really make sense. Or I won't use the sale because it's, significantly larger. And then we look and one of the comps that was already in there is about the same size, right? So we do take a look, but, if submitted properly, if the ROV is put together good enough, it's going to be hard for an appraiser to do that, because they're going to be indicating right in there that it's more similar in size or distance or time. So this is our resource page. I know Steve already referenced that. My apologies, we went over about 3 minutes, but this is where you can find many of the documents that I referenced. You can find a ROV form. You can find a one-page kind of overview of the process. You can also find that document that helps an appraiser fill out or not appraiser, but a borrower fill out the ROV, as well as links directly to Fannie Mae, Freddie Mac, and HUD's announcements regarding the policies. With that, we're down to questions again. I'm sure we could probably stick around for a minute or two if people have any questions.
Yeah, Bill, thanks. I think we hit the questions throughout your presentation here. I'm not seeing any new ones come in, but this should be an ongoing dialogue. It's an important topic for us, for the appraisers, and for the lenders and borrowers here. So we'd love for you to continue to reach out, continue the conversation, any questions you might have. My email is in the chat here as well, and I'll be glad to facilitate that with Bill. Susan, if you just send me an email for where you'd like it to go, I'll be glad to send over a PDF version of the deck for you here as follow-up. And you can visit that ROV website that we have posted there that takes away key summary items from it as well. So with that, I want to thank you, Bill, for being here today. Thank you to everybody for joining us. These kind of interactions are really helpful for us as an AMC. We hope they're helpful for you in the lending community. And we look forward to continuing these discussions going forward. So thanks, everybody, and we'll see you at the next webinar.
Thank you.